My name is Nick Gimbroni, and today we are going to be discussing why real estate is the superior asset class to invest in. Now, the first thing that I like to tell the audience specifically is why should we invest in the first place? And the reason we should invest is to multiply our money. We go get a job, we save money from that job, and instead of putting it into a bank where we're going to receive no interest whatsoever, we should take that money and put it into investments where we can receive a greater return on investment versus it just sitting in the bank in the first place. Now let's talk about real estate and why real estate is a beneficial asset class to be in. One of the main reasons is real estate allows for passive income. Now, passive income is not active income. So with passive income, you don't have to work aggressively for it. Passive income is something that is there that you collect on a monthly basis, and we consider that to be mailbox money. Because with real estate, you have tenants, and when tenants pay the rent, that pays off the principal mortgage balance that you have, and whatever is left over, that comes to you as the investor on a monthly basis through checks that the tenants provide to you. On top of that, real estate, you can utilize leverage. For example, in stocks, you can also use leverage, which is something called margin or buying on margin. But what's very risky about that is stocks can fluctuate. Stocks are not a consistent return. One day it could be a 10% return, the next day it could be 2%. But with real estate, the added benefit is it's a more conservative asset class, but for that reason, you can have steady returns versus the stock market where you're not going to generate always the conservative returns that you're looking for. An added benefit of real estate as well is it is a hard asset. Now let's take a look at stocks, for example. Stocks are really just whatever we say they are. Stocks is really just a piece of paper, an issuance that you get, right? And hey, invest in this company and who knows what's going to happen. Management can make a terrible decision and next thing you know, oh, the stock's down 5% one day. These are paper assets. They're not tangible. You can't touch them. You can't feel them. But with real estate is a hard asset that you can see, that you can feel, that you can touch. And also, there's a lot of things that you can control. You can find out who the quality of your tenants are, if they're good tenants, and then that can allow you to have the added comfort of knowing that you're owning a hard asset with good tenants in there, and it provides you peace of mind versus a stock where you have very limited control whatsoever. Now, lastly, real estate is good because it's a hedge against inflation. As we've seen even currently today, take a look at inflation. We have gas prices absolutely through the roof. The cost of lumber is skyrocketing. So a lot of millennials today are not able to purchase homes, unfortunately. However, if you came in early into the market and if you are an existing real estate investor where you own multiple homes, throughout this inflationary period, your assets or those homes are skyrocketing in value. So real estate, through that, once you hold on to these assets and you're a buy and hold investor where you're not looking to sell immediately, you now have a hedge against inflation because your assets are going to perform well versus other asset classes that might get completely hammered by inflation and you don't have that hedge. Now, to put this all into perspective, lastly, let's take a look at the S&P 500 versus the Vanguard Real Estate ETF. S&P 500 is a bunch of companies, and the Vanguard Real Estate ETF is made up of real estate companies. From a one-year time period, the Vanguard Real Estate ETF has beat out the S&P north of 3 to 4%. On a 10-year time period, Vanguard has won 330% versus 296% for the S&P. And then over a 20-year period, Vanguard had an 865.3% return versus the S&P that had 621.8%. So historically, we see that real estate is a hedge against inflation. It's a hard asset. You can utilize leverage. And it's a good source of passive income versus stocks per se, where It is not necessarily a hedge against inflation. And even though you can make good returns, it fluctuates where there's no conservative returns. And as we've seen through a 20-year period, if you look at the total returns together, real estate has outperformed the stock market from these statistics. So just remember, when you're looking to invest, the best way is to do real estate because it's going to allow you to be conservative and also build up your asset portfolio where you can succeed in life.